Good afternoon, everyone. Thank you for bearing with us as we get our presentation live, and welcome to your Phoenix home buying webinar. We have some questions that have been posted right before the presentation got started. We will be sure to answer the questions at the end of the prepared content. But some of our team members may be logging on and answering questions along the way. It looks like a lot of folks could not sign in with their name. No problem. We have all of your information, and we will be sending out the vouchers after the presentation is over to help you assist with your new home purchase with Taylor Morrison. So I'm going to go ahead and get us kicked off. I am excited to spend the next however long we take. We've got about an hour scheduled, but I'm really excited about this. I never pass up an opportunity to talk to some of our customers about Taylor Morrison, our communities, and just the market here in Phoenix. So go ahead, next slide, Adrian. I will start by introducing myself. So I am Andrea Murphy. I am the VP of Sales here in Phoenix for Taylor Morrison, which just so happens to be one of the largest markets that Taylor Morrison has across the 20 markets that we operate business in. I have been in this industry for just over 20 years and with Taylor Morrison for about 4 years now. So here in Phoenix, our local market, we have about 40 active communities. By the end of the year, we're probably inching a lot closer to 50. And my team is the team that's responsible for taking you on your home buying journey, starting from the moment that you express interest on our website, all the way through purchasing your new home, helping you with all of your financing needs throughout the process, and then closing and moving in on your new home. So we get the exciting, fun part of the journey process here. Go ahead, next slide, Adrian. Thank you. So today we're going to spend some time. I'll give you some updates on Taylor Morrison. Not sure how familiar you are with us as a company. Talk a little bit about our ever-changing market conditions that we're experiencing, and a lot about the shift that we're experiencing here most recently. Some new home benefits, meaning when you purchase a new home versus a used home, and tying that into what we're seeing from a trend right now with designing your new home. And then I do have some partners here that will be talking to you from Taylor Morrison Home Funding, and we'll talk through what those steps are and what they look like as you go through financing your home, and hopefully get some good questions answered as we go through that process. So, and then lastly, we'll tie it off with just some of the promotions that we have going on and how those are really relative and impactful as we move into the topic of interest rates, which has been, you know, the headlines of all of the news, and how that can really benefit you on your home buying journey today. Go ahead, next slide, Adrian. So who is Taylor Morrison? I mentioned that we operate business in about 20 markets across the United States. We are the 5th largest national production home builder, and we offer products to pretty much every customer that you can imagine. From if it is your first home, in some markets, we offer multifamily attached or townhome products, brand new single family homes, single family detached homes, meaning the home on its own lot. And we take customers from their first purchase, maybe second, third, fourth, fifth purchase of a home, all the way through which is our last product, our active adult product, which offers an amenitized community that our 55 and better customers get to enjoy. So we have also been entrusted with the amazing acknowledgement of being America's most trusted national home builder 7 years in a row, which is pretty amazing. And, you know, to be honest, in the time that I've spent with Taylor Morrison, I truly will say that our team is second to none. They are extremely knowledgeable to take you through this process. We have a lot of tools and resources for you to help educate you on making the best decision when you're looking to purchase a new home. And the invaluable piece, which is that we have an in-house mortgage company where each division of that, we have our partners that sit with us right in the local market. So whether you prefer to sit down with somebody face to face, virtually on the phone, we can help you out in any way that you're looking for. So I'll be excited to introduce those partners here in just a bit. Go ahead to the next slide. Okay, so we're going to talk a little bit about Phoenix, and I would say that this presentation, if I gave it 60 days ago, would have a different tone on what I would help you with in providing any sort of insight from myself on what we are seeing and how to help you with your home buying journey. But 60 days has gone by and we've seen definitely a market shift. But what I would tell you, and this is very specific to Phoenix and some of the other markets across the country, depending on, you know, where you're coming from or what you're familiar with, Phoenix is a extremely high demand market. You can see from the stats here, you know, we're number 3 in the new home market in the nation, which is pretty amazing. Over 36,000 permits. That is single family detached permits that were pulled, which is some of the highest levels that a market has seen since 2006. What is unique to Phoenix is that we see a migration of customers coming to the market just under 100,000 a year. And that isn't stopping anytime soon. You know, the growth from an economic standpoint is there. If you live in the market or if you're traveling to the market, you will see a ton of commercial growth across the valley. And that's not stopping anytime soon, which will continue to help support the population growth that is coming. And that's where you'll see, I'll talk a little bit on the next slide about just the low supply that we have in the market. Before that, though, I will say, oops, sorry, one more. Thank you. You know, couple last comments on, again, if you live in Phoenix, you know this already. If you're coming from outside the market, Phoenix ranks number 9 in the most beautiful states that you can live in the United States. And clearly, we have a ton of destinations that you can enjoy, from the Grand Canyon, Sedona, Flagstaff, Scottsdale. Each unique submarket offers something that truly is unique, and it's proven to be a really, really, really great place to settle down, raise a family, as well as being a very affordable destination. If you've been in the market for the past 2 to 3 years, you have seen prices go up at a pretty rapid rate. You'll see from the chart here, Phoenix's average price point of about $475,000 is still very affordable when you look at the top 10 markets across the United States. So while folks that have been here for a while have seen prices increase rapidly, I would tell you that Phoenix has the ability to support that pricing, along with what I mentioned of the economic growth coming in. Go ahead, Adrian.
I am so sorry. I just want to make sure we've had a couple of folks in the chat say that they can't hear. And I just want to double check with Adrian that although the audience is muted, that we are not. Sorry about that.
Okay.
We are not muted, Christy.
Okay.
Tested on multiple other pieces and we're good to go.
Thank you.
Okay, perfect. I'll go ahead and keep going here. So as I mentioned, you know, in the Phoenix market, we have record low supply, just under 18,000 new homes under construction, which is very, very low. It was almost double that in the peak of the market, right before the downturn of the market, starting at about 2008, 2009. So we are still seeing record low supply. We definitely have a low supply on the resale side as well. That is changing daily as new homes are being presented to the marketplace, but we're still sitting about just under 2 months of supply from that perspective. A normal market condition, you would see about a 3 to 4 month supply on the multiple listing service or that state's Department of Real Estate. So we also are seeing record low from a foreclosure perspective, which I think coming out of the financial crisis, this is not surprising. As our partners with Taylor Morrison Home Funding will talk today about the qualification requirements to getting a mortgage and owning a home today, you know, that has definitely put us into a good place so that if there is any reset in the housing market, that we won't see what we saw before with a number of foreclosures affect the value of your new home. Go ahead to the next slide. Okay, so this has definitely been the topic of every news channel that you put on. Not sure if all of you have been following, but you know, in the past 60 days, 45 to 60 days, we've obviously seen an interest rate hike that honestly is probably unprecedented from how much that has gone up. Not historically, but in the past probably 5 to 10 years, you know, it has definitely spiked. And I think that, you know, at the end of the day, it just causes a lot of pause on decision making on what should I do, where are things going, and all of the thoughts that go into purchasing a home, whether it's new or a used home. So what this is demonstrating for you is just kind of taking a look at what the historical average is and where we've gone. If you asked me probably 10 years ago, would interest rates be at 2 and 3%? I would say absolutely not. Or even 12, 13 years ago, you know, they were still hovering around 4, 5, 6%. So it's not unnormal to see interest rates like this. And as markets continue to shift, the great opportunity for you if you're in the market to purchase a new home is all of the special incentives that the builders specifically can offer you to help you feel more comfortable in the interest rate, which ultimately translates into your monthly payment. Go ahead to the next slide. Thanks. Okay, so benefits of owning a new home. For starters, it's brand new. You get the new car smell per se. Everything is designed based on how you've designed it, right? At the end of the day, real estate is still a fantastic investment. I don't think that anyone sets out to purchase a new vehicle and think that that is the best investment that they're going to make, because the moment you drive a new vehicle off the lot, typically your value goes down by a certain percentage. Well, with a new home, the great part about it is whether you're the first customer into that community or the last customer into that community, it's a new community. And as that community grows and the amenities start to flourish and all the landscaping gets built, the location becomes key. And that really gives you the ability to have a long-term investment as you continue to move forward in your home ownership. Not only that, like I mentioned, you get to personalize your home, design your home. It's very fun. It's a very fun process, and you get to make it what you want it to be. And the moment that you walk in, you can walk in saying, this is something that I did. And it's this moment of proudness that you get when you walk into that home. Go ahead to the next slide. So we have something that is unique to Taylor Morrison here in Phoenix, where we have launched our Canvas program. And this is new to some of the communities that we have across the valley, and we will be continuing to deploy this in a lot of our communities. What Canvas means to you and to Taylor Morrison are pre-designed or curated packages of all of the parts and pieces that go into your home that you can see. Your cabinets, countertops, flooring, your kitchen backsplash, the door handles on your cabinetry, all of those touch and feel items have been packaged together to give you an idea of what the most recent trends are, but most importantly, allow you the opportunity to visit our sales offices, decide what package you like best, and leave the sales office with an absolute idea of how much that home will cost you. In a lot of our Taylor Morrison communities, you go to the design studio and you're almost left wondering, okay, on my way to the design studio, how much will I be spending? This really alleviates that concern on what is the home going to cost me at the time of purchase. So far in the communities that we have launched our Canvas packaged program, we have a ton of positive customer feedback. The ease of walking in and knowing that all of these items have been hand selected by Taylor Morrison's designers. They are of the highest trend factor, so you know that you'll be fashionable across all of your friend group. But honestly, most importantly, is that the customers really value the fact that these packages allow them to know what they're going to be spending on that home at the time of the purchase. Go ahead to the next slide. Thank you. So before I turn it over to Christy at Taylor Morrison Home Funding, I'm going to touch on just a moment on, my team and some of my partners that will work with you through your home buying journey. So as you're exploring the website, and I think everyone's journey right now in this day and age starts with online search of new homes. And when you land on the Taylor Morrison website, you're introduced to our internet home consultants, and those are by market. So when you go on to the Phoenix communities, you will be greeted with Star and Christina, and they are there to really help you answer any initial questions before you go out to the community, as well as set you up with an appointment with our on-site team, the community sales managers, so that you have dedicated time with those folks to take you through the entire process. So the internet home consultants are there really as a guide. They're as a concierge to you. They can answer a plethora of questions that you may have, but once you really get focused on a specific community, they're there to help you in the next step. The community sales managers are absolutely the experts for those specific communities. They're going to know anything and everything about the floor plans, the community, the amenities, area, schools, shopping. Is there a Starbucks on the corner? Whatever you're wondering, they're there to help you along the way. They stay there with you, taking you step by step through the design of your home, the build of your home. They help you with transitioning you to our Taylor Morrison Home Funding partners, and also assist you with closing on your new home. So they are there. They're your rock. We do have professional designers here in Scottsdale, and they work with you to help design your home, whether you purchase through the Canvas program or you are designing right from scratch. So that process is pretty seamless. And that's when you would get turned over after you complete the design to our construction superintendents. And they are, I know everyone probably thinks theirs are the best. I will truly say here in Phoenix for Taylor Morrison, we have some of the best. We have superintendents that have 20, 30, 40 years experience building new homes. And really their job is to ensure that our trade partners are building your home to the most up-to-date building codes and the most up-to-date energy codes that are supplied through the local market. They're also there to schedule all inspections, do your walkthroughs, and ensure that we're building your home with the utmost quality that we can deliver to you. Before I turn it over to Christy and her team at Taylor Morrison Home Funding, as I mentioned in the beginning, The loan consultants that we have are here local in Phoenix, and that is very unique. A lot of times when you apply for a mortgage, you don't necessarily have the opportunity to speak to somebody face to face. And if that's something that you would prefer, we've got you covered. Same as our superintendents, they have years of experience in the mortgage industry, and they are very knowledgeable on the new home construction process. It's very different than buying a resale home, and they're there to take you through that process, partnered with your community sales manager. So Christy, I think it's time I turn it over to you. I'll go ahead and put myself on mute and take it away.
I'll let you catch your breath, Andrea. Thanks so much.
Thank you.
Welcome, everyone. I am Christy Farrow. I am our Vice President over our Florida Regional Origination team. I have been with Taylor Morrison for over 20 years, and I've really called Taylor Morrison home for the majority of my career. I started as a loan processor turned originator to corporate trainer nationally, and as we have grown our footprint across the nation with Taylor Morrison. I do oversee our Florida operations and originations, but I have the pleasure of still participating in our training and marketing nationwide, and I'll be excited to introduce you to a couple of our local Taylor Morrison Home Funding team members in just a few minutes. I am going to stick with my notes, and as much as I want to stay on camera, I don't want to leave anything out. We really just want to scratch the surface on some mortgage qualification today. And then to Andrea's point, how best to work with us seamlessly on your new purchase. And so with that said, Adrian, you can hit the next slide. So we're just going to give you guys an overview today, but really appreciating that the thought of buying a new home can be exciting on one hand, but then there's the financing side of it that can feel daunting and scary. And, you know, we don't get to sell you the tangible, we get to sell you 30 years of debt, but we really do look at what we do here at Taylor Morrison Home Funding as home selling and getting families into new homes. We do not work on refinances. We are 99.9% all Taylor Morrison home purchase lending. But what we want to do today is just provide some information that is not super overwhelming. And like I said, just scratches the surface of some basic qualification guidelines and maybe point you in the right direction of home ownership. And we could spark some more questions or give clarity that maybe you are in a good position to start looking for a new home. And if you aren't ready just yet, you might be closer than you think. So we're going to give you some tips and tools, but in addition to basic qualification, we've got Deandra Avalos with us today, and she works in our Able Ready Owned department, Arrow. That is qualification, improvement, and loan enhancement, and she'll tell you about that. And we have Kyle Howard with us today, who oversees our Phoenix loan consultant team. And then we're going to introduce, and he's going to introduce you to Dorothy, and Dorothy is our technology platform. So moving into mortgage qualification, we're going to talk to you today about the 4 C's. And this is kind of, if you were to Google, you did loan qualification, these are the 4 basic components of qualifying for a new mortgage. I personally like to think of it as 4 legs of a chair. And this is a little rhetorical, but I know I wouldn't sit in a chair that only had 3 legs or one was broken. And so we really look at loan qualification the same way. And we want to make sure as a lender that every single piece of this is strong. And so I'm going to touch on a couple and then turn it over to my loan partners. But we do want to make sure that if you're going to move through a new construction home buying journey, that you are in a good position to do so right in the beginning. So first, you know, the collateral piece, moving on to that, Adrian, is really about the appraised value of the home. And we actually had a question about that before we started the live presentation. So hopefully I'm able to answer that. But when you do secure financing, as a lender, we require an appraisal report, and we need to make sure that the home you're purchasing establishes that fair market value for the price of your home. And we do our lending based on how much down payment you need will be tied to either the sales price or appraised value, whichever is less, whichever is more, excuse me. But as a home buyer, you want to make sure that you're protected from paying too much. And as a lender, we want to make sure that we're lending to a true value of the home at that time. So we work with third-party appraisers, and they do deep research of comparable sales data and closings, and they actually do on-site visits to verify that what they're comparing your home price to matches up in size, features, conditions. They take measurements, photos, and we do this towards the end stages of your home buying journey before your home is complete. And there is a report that is provided to us. It's for that moment in time. It looks back at the last 6 months within a very small area, maybe 1 to 5 miles from where you're purchasing, to make sure that your home size features mirror and match with other homes in that area before we close on your new home. The cash down payment portion, which is going to be our second leg of our chair, is really making sure that the cash you need for down payment, closing costs that are needed, are there and available to complete that home purchase. So when we talk about down payment and we talk about loan to value, which goes alongside with that appraisal we just spoke of, we want to make sure that the ratio used to determine that amount is given in the correct down payment and meets our lending guidelines. So the maximum loan amount is going to be, as I mentioned, the sales price or the appraised value, whichever's less. And your minimum down payment is going to vary by that loan product and or your occupancy. So if you're not buying a primary residence, there's going to be different requirements for a vacation home or maybe an investment property purchase that you're doing. We show an example, it's very basic, of a $300,000 purchase price. The value, if it were to come in at $310,000 on that appraisal report, would be the sales price being less than the value. We're going to standardize your lending on that sales price. So if the down payment requirement was 5%, then we would require 5% to the $310,000. But good for you, you're walking into your home with equity already built in. And that happens very often with new construction because you're locking in your purchase price anywhere from, could be 60 days up to 1 year prior to your closing. What we want to make sure, though, is when you are providing your down payment, that it meets the acceptable sources for what the lending guidelines require. And we've given that list here of what is acceptable and what is not acceptable. So if you are saving funds for closing and down payment, then you want to make sure that you don't leave it in your mattress, in a drawer. Credit cards are considered unsecured funds. So although you could take money out of the equity of a current home because that's secured funds, you cannot do your down payment on, for example, a revolving credit card or any type of cash advances. In addition to that, borrowing funds to do your down payment would be unacceptable. However, if you have a family member that is willing to help you out with down payment, that is absolutely considered okay. And we would just make sure that we would verify that with that family member. Moving on. When you are ready to buy your home at Taylor Morrison, there is a deposit, and that deposit is given at the time of contract. It will vary depending on the market you buy in, the community you purchase in, and every market is going to be a little different. But for the purpose of the call today, we would certainly say, based on that community you're looking to purchase, you would want to make sure you talk directly with that community sales manager to know what the requirement is. But when you give that earnest money deposit, it will be applied towards your down payment at the time of closing. So if you're going to obtain financing versus paying cash for your home, then we would verify that those funds you gave to the builder, if they're going to be used for your down payment, are able to be sourced. So if you have some extended time between purchase and closing, it's just a matter of honestly giving bank statements, for example, to show that those funds cleared your account and they were sourced. Next slide, Adrian. One of the unique things that Andrea mentioned, and we will talk about current promotions that are going on right now, is there are contributions that can be given, although not to down payment, they can be given to the other expenses that are going to be needed when you close. And those are closing costs and setting up your escrow account for homeowners insurance and real estate taxes. You might be interested in buying down your interest rate to get a payment that feels more affordable. Upfront mortgage insurance, a lot of people think that's a dirty word and need 20% to put down, but we have solutions that we can provide that will help you eliminate the need for mortgage insurance. And then of course, there's homeowners associations in the majority of our communities, and you can receive incentives and contributions to help with up to 1 year of those dues. So those contributions can be provided by either Taylor Morrison as your seller. They can be provided by Taylor Morrison Home Funding as your lender, which we do offer a lender credit towards closing costs. And then if you're working with a real estate agent and they want to contribute towards some of these costs, they can do so as well. Next slide. So we're going to move on to a third C of capacity, which is employment and income. Obviously, we want to make sure that there is job stability and there is continuance of that income that you're receiving. And it is important to note, and this is a lot of folks don't realize this, that we approve mortgages based on gross income. So it's not the paycheck net amount you're taking home. It is the gross amount before your federal and state taxes are taken out. And we'll talk a little bit about monthly income and debt. Kyle's going to get into that to understand that maximum spend against your income that we use to qualify. When we talk about job stability, the rule of thumb really is a 2-year job history in the same line of work. It doesn't necessarily need to be the same employer. And we do make exceptions to that. So I'll give an example, and actually at the last home buying webinar we did last month, very shortly after, we had somebody that was interested in purchasing who had just recently left the military. But the example that I'll give today is if we had a recent college graduate and they were entering their career and they recently graduated college and they're W-2 salaried employee, we absolutely would be able to consider that income and just show that that college student and our new home buyer is working in that same line of work as they received their degree in. We have customers that maybe have had a gap of employment. It could be a hardship, could have taken time off for family reasons, and now they're reentering the workforce. We can consider that to bridge that gap of employment as well. We do work with a lot of self-employed customers or contract workers who receive a 1099 type income, and we do typically require that 2-year history. And same goes for income that is fluctuating, such as commissions, bonus, overtime, or if you have a second job, that truly is usually needed to look at a 2-year job history. Andrea mentioned our 55 and greater buyers who might be on a fixed income. Social Security and pension is used for retired borrowers all the time. A lot of times there are IRAs and investment accounts, and if there's distributions received or it's time to set up those could be funneled for income streams as well. And then lastly, you might be a home buyer who has alimony or child support as income, and we can consider that as well. So again, we always recommend to talk about your job stability, continuance of pay directly with a loan consultant before you purchase, so we truly can understand where you're at with that and hopefully help you realize if you do meet that requirement for payment versus income that's coming in. I am going to turn this last C over to our resident expert, Deandra Avalos. She has been with our company for a long time and is all things credit subject matter expert. So Deandra.
Thank you, Christy. And welcome everybody. Good afternoon. I've been in the mortgage industry for about 22 years, and I was fortunate enough to find my home with Taylor Morrison 14 years ago. I've worked as a mortgage admin in Houston prior to moving to Arizona in 2008. I've been a loan processor. I've assisted with sales and closings. So when this opportunity was presented to me 11 years ago, I kind of jumped at it. In this role, it allows me to educate buyers on the ins and outs of credit and help guide you to your new front door and achieve your dreams of home ownership. Next slide, please. Credit quality. Credit is like a thumbprint in its uniqueness. No two customers' credit profiles are the same, and each one tells a story. Credit's typically the topic we always get the most questions on. Your credit score gives an overview of your credit risk to a lender, and it's a factor in the price you'll pay for your mortgage with your interest rate and potential mortgage insurance premiums. The lower the credit score usually indicates that you've had late payments or maybe some derogatory events that prevented you from qualifying before until you're able to raise your scores, which could be as simple as allowing enough time to pass and show that you've improved in managing your debts. Let's talk a bit more about credit and ways that you can enhance your score to obtain the best possible financing. This next slide just kind of shows the primary score factors. As you can see, 65% of your credit score is based on timely payments and overall credit utilization, which simply means how much you owe against how much available credit you have. Next would be the age of your credit history, followed by new credit, and then the mix of credit types like student and car loans, revolving debt, and mortgages. Our next slide is kind of going to go over credit basics. I'm just going to briefly touch on the differences between a soft inquiry versus a hard inquiry. You'll be able to review the slide later on if you'd like when it's emailed out to all of you. First, it's important to understand the difference between a soft inquiry and a hard inquiry. There are a lot of myths about credit inquiries, but a soft credit pull doesn't impact your scores. These would include things such as pre-approved credit cards, checking your own score with the bureaus, even Credit Karma, and employment verifications. A hard inquiry would happen when you directly apply for credit cards, any type of loan like student loans, car loans, mortgages, or even a personal loan. And those inquiries can remain on your credit report for 2 years and could cause small incremental decreases in your overall score. I believe on average it's less than 5 points. Only 14% of consumers lose more than 10 points because of an inquiry, and 89% of that time, inquiries aren't even one of the top 4 factors impacting your credit scores. When shopping for big loans, such as mortgages and auto loans, you typically won't get an incremental ding if you're shopping around within a 14 to 45-day time frame of that initial inquiry. When you pre-apply for a loan with Taylor Morrison Home Funding, we're going to do a soft credit pull, which only provides us 2 of the 3 scores. And then once you make the decision to purchase a home and move forward with your formal loan application, a hard inquiry would then take place. Next slide, please. Taylor Morrison Home Funding has a department designated solely for qualification improvement and loan enhancement. It's ARROW, or Able, Ready, Own, where we offer a personalized strategy to help enhance your credit and provide you with the guidance and education to get you on the right path. ARROW is not only for those of you seeking credit score improvement to gain loan qualification. It's also for those with great credit who seek to enhance their scores, which could provide additional financial benefits with rate and decreased mortgage insurance premiums. ARROW is a complimentary service for those looking to purchase. Our ARROW consultants will work with you to tailor a path specific to your needs. Next slide, please. After you pre-qualify with a Taylor Morrison Home Funding loan consultant, they will enroll you in our ARROW program where we will run credit simulations based off of a tri-merge credit report and provide you with a personalized improvement path based on your needs and goals. ARROW isn't classic credit repair, meaning we will not speak directly with your creditors or negotiate debts on your behalf. The only thing that we do ask is that you actively participate in your enrollment to complete our ARROW program and become an ARROW graduate. Some examples of ARROW recommendations would be suggestions to open new accounts, to be added or removed as an authorized user, pay off accounts or reduce balances on existing credit. Our Arrow consultants are familiar with your financial profiles, and we work hand in hand with the loan consultants and Taylor Morrison to ensure we are not making recommendations that would hinder your ability to purchase, such as utilizing all of your down payment funds to pay off debts. We engage with you and assist in keeping you focused and on task with open communication by phone and email. Next slide, please. Arrow has helped over 4,800 families gain score enhancement and achieve their dream of home ownership. This slide just gives you a visual of the number of families that Arrow has been able to provide guidance to over the last 12 months. Our hope is that you see the value of using Taylor Morrison Home Funding and Arrow, and that we get the opportunity to work with you next. And with that, I will go ahead and pass you on to Mr. Kyle Howard.
Hey, good afternoon, everybody. My name is Kyle Howard. I'm the branch manager for Taylor Morrison Home Funding here in Phoenix. Have about 18 years of experience, and all of that has been in new home construction working for home builders. So it's definitely my expertise and niche. Here in Phoenix, we have over 14 loan consultants that all live locally, licensed here, that will help you along your home purchasing journey. If we go to the next slide. So what mortgage suit your needs? So conventional loans, this is our Fannie Mae Freddie Mac loan, goes up to a loan amount of $647,200. These are the majority of the loans that are out there, require a minimum of a 5% down payment. If you are a first-time home buyer, you can get in with as little as 3% down payment. Now, the myth out there is that conventional loans require a 20% down payment, which is not the case. So again, 5% if you're a non-first-time home buyer, 3% down if you qualify as a first-time home buyer. And what a first-time home buyer means is you haven't owned property in the last 3 years. So if you owned a home 5 years ago and sold that home 5 years ago, you would qualify as a first-time home buyer. So conventional loans are a great product. They do have private mortgage insurance when you put less than 20% down, but really good interest rates, really good products to get into your loan. We do offer VA loans. These are for our veterans or our active military, and also a surviving spouse of somebody in the military that passed away due to a service-connected disability. These require up to zero down, depending on the amount that the veteran is entitled to. With these loans, there are no mortgage insurance requirements. There are VA finance funding fees, depending on the use of it. So again, we do a lot of VA loans here in the Valley, especially on the west side of town, close to Luke. But it's a great loan out there. We also offer FHA loans. You know, the common myth is FHA loan is your first-time homebuyer loan. Not necessarily. There's great benefits to an FHA loan. Low down payment of 3.5%. You don't need to be a first-time home buyer, so you can own. You could have owned in the last few years. Our county loan limit is $441,600 here in Maricopa County. So again, it's a great product with a lower down payment, which also allows for some higher debt to income ratios. I think Christy mentioned DTI earlier on in the presentation, and we'll talk a little bit about that as we go throughout. One of the loan products that is more commonly in the last few years due to our price increases are the jumbo loan product. We don't have here on the slide, but generally a jumbo loan is going to be a loan that's going to be above $647,201. We have several investors that we have in-house that were able to secure those jumbo mortgages with as little as 10% down. So something additional to think about. If we can jump to the next slide. So we talked about debt to income ratio and what is that? First thing we're going to look at is our total housing payment. There's going to be parts of that. The acronym is PITIA. So the first part of that is the P&I. This is our principal and interest. This is when you take the interest rate of the note rate and you amortize that over the period of time based on the interest rate of the loan. The next part is going to be our property taxes. We're going to take whatever we calculate those to be annually, divide those by 12. 1/12 of that will be included in your mortgage payment. Homeowners insurance, this is what protects the home. This is the replacement cost. If something happened to the home due to an unforeseen event and required it to be rebuilt, this is what you're paying as part of the mortgage that allows the home to be rebuilt and replaced. Mortgage insurance, if applicable. This would be on our conventional loans with less than 20% down payment, or on our FHA loans as well. So that'll be part of the payment. And then again, I think Christy mentioned this before, all of our communities here in Phoenix are going to be considered planned unit developments, which will have a homeowners association, and those will be part of your PITI payment as well. If we can jump to the next slide. So how much can we afford? Your debt to income ratio is how much you owe each month to how much you earn. So the qualifying rule of thumb for a conventional loan would be 36 to 40%. However, on VA and FHA loans, we can go above 50% with compensating factors. How we do that is we're going to take your pre-tax income or your gross income, and we're going to divide that by our expenses. So your total monthly expenses, this would be your car payment, your credit card payment, a student loan, an installment loan. And then we're going to add the PITI payment, and divide those two. We're going to come up with a debt to income ratio. So again, if you're going to make $5,800 in pre-tax income and your housing payment plus your other expenses are $2,150, your debt to income ratio would be 37%, which would be well in line to meet the guidelines. If we could jump down to the next slide. So we kind of talked about Dorothy early on, and what Dorothy is. If you've seen the commercials out there with Quicken Loans has Rocket. Well, here at Taylor Morrison Home Funding, we have Dorothy. Dorothy is our technology foundation. And so just like Rocket, we use Dorothy to get everything going, to pre-qualify, to take the first steps, and to be able to move forward and have questions asked. So if we understand purchasing a home is not something that happens often in someone's lifetime. It's financial and emotional commitment, likely the largest purchase you've ever made. So it's important we're available to guide you every step of the way. So when you're ready to reapply, you're considering our Arrow services, or simply just want to talk to a mortgage professional, you can get started by going to taylormorrison.com/home-financing. Please move to the next slide. A great thing, if you had specific questions and you weren't ready to pre-apply, or if something specific to your individual situation, if you go right to that website and you go to the Talk to Us button, you're going to get our contact information. So you can email our Phoenix loan consultant list, and that comes to all of us on the team. And one of us will step up very quickly, answer your email, or give you a return phone call if that's the preference of communication. Be able to answer all the questions that you have to get you going and start for the journey. So with that, I'll pass that over to Andrea.
Okay, perfect. Christy, can you hear me okay? A thumbs up. Just want to make sure. Perfect. Okay, go ahead to the next slide, and Christy and I will take us through the remainder of the presentation. So how do I start my home buying journey if you have not started yet? As I mentioned earlier in the presentation, most home buying journeys are starting online. So whether you're at your desktop, on your smartphone, or whatever device you're using, you can go on to Taylor Morrison's website and start however you would like. We do offer both in-person, virtual appointments, as well as phone calls, just depending on where you're at and how specific you are with some of your questions and who you'd like to speak to first. So our website is very user-friendly. It will pop up and kind of follow you around and see which way you would like to come and tour one of our communities. And as I mentioned, you have your internet home consultants that are there to help guide you through that process as well. Go ahead to the next slide. I'm going to talk just for a moment about the Taylor Morrison website. So when you log on to taylormorrison.com, in the upper address bar there, you'll see that you'll be able to toggle between our different states and markets. So specific to Phoenix, you would click on Arizona and click on the Phoenix market. And each of our communities is grouped in alphabetical order, but it will also follow you around based on where you're looking. Like all websites, it's pretty intuitive for you. So if you're looking in a general area and you want to, for example, look in Queen Creek, it will pull you to all of our communities in Queen Creek. And if there are multiple series of homes within that community, it will display, as you see here with Combs Ranch, one of our newest communities, that you'll see we have 2 series of homes. Go ahead to the next slide. Okay, so this is where you'll see that we have, as I mentioned, over 40 active communities, all at different stages. And I saw one of the questions was just about the current supply chain environment that we're still experiencing across every industry. And when you go out and buy milk, you know that we're still experiencing that with the price of milk right now. So, there are some communities that we're still waiting for our models to complete. So you will see that we're, selling virtually or get a in-person appointment. So we try and be very clear with you on the website so that you know what to expect. But rest assured that we'll be able to quickly get you an appointment with one of our community sales managers. Anytime that we're doing a pre-sale or pre-grand opening community, it can be very, very interesting as we move through the construction process. So if you have some good boots, and we'll get you a hard hat, we can take you out onto our site so that you can see things. But if you're a little bit more visual, what's great about us being so large in the Phoenix market is that we can send you to some of our other communities that may display the model home designs that you're interested in. Go ahead to the next slide. Our online home reservation, this was launched actually a couple of years ago, and we're still in process of making this even more improved. So what this allows you to do as a consumer is truly shop for a new home, sitting in the comfort of wherever you call home today. So right now in Phoenix, we have activated all of our quick move-in or available homes online for you to reserve the home. It does ask for a $100 refundable hold fee, while the reservation request goes to our team to ensure that the home hasn't sold while you're sitting and shopping for it at home, but also so that we can kind of get you set up in the next step of the process. So you will get called from the Internet Home Consultant team. So whether it's Star or Jenny here in Phoenix, they will go through a series of questions just to make sure that this was the home that you intended to reserve. And then they'll get you set up as quickly as they can with an appointment with our on-site team to help complete that home purchase. Everything with Taylor Morrison can be done the way you want it to be done, whether it's virtually, in person, phone calls, pictures. We're there to make this the best journey for you and how you want it. So this is actually a really cool tool that we have deployed here. And coming soon, we'll be able to deploy our lot reservations, which would be homes that we have not started construction yet. You choose your home site, your home design, and work on a reservation from there. So lots of online shopping tools that you can absolutely get addicted to as you continue your home buying journey. Go ahead to the next slide. Okay, so after you set your virtual appointment or visit a community, we do have at that time that you would let us know if you're working with a real estate agent. They are able to pre-register you online at the community or by calling one of our team members. That will then translate over to our community sales managers, which will get you set up for your pre-qualification with Taylor Morrison home funding and move you to the next step of your purchase. Next slide. Okay, I kind of covered this one a little bit earlier. couple of things on here that I may not have covered, and I don't remember now, but the warranty that comes with a new home, definitely want to make sure that I mention that. Oh, I'm sorry, this is specific to the quick move-in home. So this is something to where if, as Taylor Morrison, we have gone ahead and gotten a permit, started construction on a home, and selected all of the design options. What this allows you to do, and there was one of the questions in the chat regarding interest rates. This definitely lessens the stress on your choices that you need to make, but also allows you the opportunity to lock in your interest rate sooner. If that's something that is at the top of mind for you, it definitely helps. There was also another question regarding the current build times, given the current supply chain environment that we're experiencing. This gives you a jump start on your build time. If you need to move in sooner, I would definitely take a look at what availability we have for our quick move-ins online at taylormorrison.com. Go ahead to the next slide. Okay, so I'll take the front end of this, and I think I'm going to have Christy help me with the back end of it. But we have, as I mentioned, the builder or Taylor Morrison has the ability to really make your financing impactful for how whatever you need, whether it's less money out of pocket at the closing table, or an interest rate buy down for a temporary period of time or a long-term period of time. We're definitely offering some great incentives and promotions right now. Specific to our inventory homes, we do have a 4.99% locked interest rate, which is very palatable right now given the current environment for interest rates. Go ahead to the next slide. Thank you. So one thing before I turn it over to Christy that I want to mention, and I mentioned this when we talked about our Taylor Morrison partners, is that when you start the process with pre-qualification and you get turned over to one of our loan consultants, it's very important that you communicate upfront truly what it is that is at top of mind for you, whether it's interest rates and securing something long-term because you feel like you're going to be in that home for a while, the cash out of pocket, or it could be a combination of many things. They will be able to take the funds that Taylor Morrison is offering you, partnered with them, to put together the best financing package for you. So Christy, I'll turn it over to you just so that you can talk through a couple ways to save on this price home for the customers on.
Thanks, Andrea. And I think it's important to mention too, with the interest rates rising, of course, everyone's wondering, is it a good time to buy? Should I have purchased when the rates are lower? And what this infographic is showing you, and I won't go through it in detail, but when you do get the presentation, a lot of times it is a very big myth that by buying a lower priced home is going to drive you a significantly reduced payment or cash out of pocket. And we talked today just about, down payment, and that is a percentage of your price. So if you took those same dollars to reduce the price and applied those same dollars to financing, you will find that 99.9% of the time, you're going to receive that lower payment by buying down the rate. You're going to have lower cash out of pocket, and you're going to protect the value in your new community. So this is just kind of an illustration right here, and it uses an example of a $600,000 home, but it's all relative, and it's a comparison. Right now, Andrea, you tell me, but I believe Phoenix is offering anywhere community specific from 4 to 6% of total purchase price, right? And just putting that into dollars and doing the math here, we're using a $600,000 example, and on the lower end at 4% of that price, that's $24,000 that you have to use to do all of those things that are mentioned here. Closing costs are an expense that you have when you close on a home above and beyond your down payment. So to have less cash out of pocket to get you in your home and your new home, and maybe you want new furniture, maybe you want cash reserves sitting in savings for a rainy day, that is a great opportunity. And if you feel you're going to be in your home for a long period of time, then you may want to permanently buy down that interest rate. Use some or all of those funds to get you the lowest rate out there. And that is displayed here when you see that 4.99 or even 5.5%, which is still an incredibly great interest rate. You know, you can spend as much or as little as you want to do that. But your loan consultant would be the one that can help you figure out, you know, if this is your first home and you really think in 3 to 5 years that you are going to want to move up to a larger home and your family's going to grow, we're able to do what's called a temporary rate buy down, where Taylor Morrison can actually pay and subsidize a portion of your payment for the first couple years. It's going to let you grow into that payment. If you're currently renting and you feel maybe that extra $300 a month is a little out of scope now, and you're starting your career, and know that, or maybe there's a car that you're going to have paid off in 2 years. This gives you a subsidized payment for the first couple years, but still gives you a security of a fixed rate. A couple questions in the chat about new construction have asked, you know, about interest rate locks. Andrea talked about quick move-in and that you have the opportunity to lock in. Well, we actually also have an extended rate lock. So we offer interest rate locks for up to 1 year. You have the ability, if the interest rates were to go down from where you first locked, that 30 days from closing, you can float down to a lower rate. Taylor Morrison is theoretically reimbursing you the upfront fee that's needed to do that when you go to closing on your home. So it gives you that peace of mind during construction. I think of that almost like an insurance policy. You know, if I'm going to pay money up front to, if I pay a premium on my homeowner's insurance, it's the God forbid my home catches on fire or something unexpected occurs. We think of that the same way with the extended rate lock. So you can rest your head knowing that the payment that you've secured will stay. And then lastly, if you really are saving to put 20% down, we have a way to put money in your pocket. So you could put 5, 10, 15% down in lieu of that. And Taylor Morrison has those funds that will help you qualify by not having a mortgage insurance premium, and put money back into your savings for that rainy day. So just a lot of options here. I think it's a great illustration, Andrea, of what you guys are doing right now to make people kind of roll back that interest rate from where we were earlier this year.
Thanks, Christy. Go ahead to the next slide, and thank you for hanging in with us. We're about 5 minutes over, so we only have a couple more things to talk about. Our last couple of topics is on OfferPad, and Taylor Morrison has a great partnership with OfferPad here in the Phoenix market. And if you haven't looked into any of the what they would call iBuyer, programs, it really truly is something that is unique within the past 5 years of home selling. OfferPad has a couple of competitors with Open Door, and for a while Zillow was playing in this arena. But the great thing about this is that you go online. We have right there OfferPad, Taylor Morrison. You can get to them through our website as well, and our community sales managers can help you with that connection. It gives you a great sense of what you can sell your home for. You go online, you send in the information, and within 24 hours, they send you an offer for your home. It is no twice moving, which is fantastic, but they do allow for a 6-month stay after you close on your home with them. But truly, because they are such a great partner with Taylor Morrison, they work with us with all different times of having to be in your new home. So you could see the up to 9 months. In specific situations, they'll let you stay there for longer. So they do provide for a free local move as well. There's no bait and switch. There's no surprises. You go online, you get your offer, and if it's something that interests you, you're done. Many of our employees at Taylor Morrison have used this, can tout to the sustainability of this, and it truly does help with just that stress of, I want a new home, I have a home to sell, what do I do? at the beginning of your home journey, going online and finding out. It also gives you a good idea of what you would be able to sell your home for to help guide you into what community you feel comfortable in. Go ahead to the next slide. So lastly, and I believe that Stormy put it in the chat, this voucher will be sent out via email after we're done. Take this and present it at any Taylor Morrison Phoenix community to receive the offer of the refrigerator, washer, and dryer. I did mention in the chat that if you wanted something different, our community sales managers have the ability to apply that credit towards a different appliance, but it expires August 31st. So come in and see us soon. We're really excited to help you in this next chapter of your life. Go ahead to the next slide. Okay, I think that's about it. A recording and the PowerPoint will be sent to you. We do have our Internet Home Consultants email address with phoenixonline@taylormorrison.com. It's been a pleasure to spend the last hour with you. I really appreciate it. We have some of the best questions on here. We can tell you're doing your homework, and we're really excited for this time for you, and we look forward to helping you with your home purchase. So we appreciate it, and have a good rest of your Wednesday.
Thank you.